Welcome to the show, Andy.
Thank you.
Hey, Andy, quick question for you before we get started. Have you ever heard the term, hey, let's go Krogering?
No.
You've never heard that either? Jenny Horn said she didn't hear about that either. Instead of saying, let's go shopping, let's go Krogering. And I can't believe that you guys have never heard that.
No, that's a new one on me, and I'm not seeing it anywhere on Twitter. I doubt Jenny is either.
Well, I saw it 25 years ago, so maybe that dates me a little bit. All right, so what are we seeing from LikeFolio on this name? Been under pressure a little bit lately, but consolidating. What are you seeing?
Yeah, on Kroger, what we generally like to do, because people don't really talk about that much, how much they're going shopping at the actual store, but what they do talk about is new technologies, and we also think as investors about the threats to a legacy business like Kroger. And a lot of the times that comes in the form of, how are they doing on online shopping? And so we did a probe on this into Twitter data, and it looks really good for Kroger, actually. This is purchase intent mentions of people talking about actually using Kroger's Clicklist service over the course of several years. You can see that takeoff from 2017 through today shows really good adoption of this online ordering technology for Kroger, which tells us that the company is doing a very good job of, getting in front of these trends, making sure Amazon isn't going to be the big disruptor that everybody thought it was going to be when it acquired Whole Foods. And, just in general, the online shopping for grocery segment has really risen as well. We see a congruent increase in consumer adoption of that trend. And so we think Kroger is on trend, from a technology perspective. They're doing just fine. Their Clicklist is doing really well. And, we just don't see drones dropping avocados into people's backyards from Amazon anytime soon. And so, so far so good for Kroger from a, risk mitigation perspective.
Yeah, and you make a good point there with this this Clicklist and their e-commerce business a little bit, because you can also equate it to Walmart and Target, which did really well on there. You order it, but you pick it up as opposed to getting it delivered. Margins are better on those too, and that's why maybe Amazon's getting into this space where, hey, we want to expand our Whole Foods line, and we're going to get into the grocery business moving up soon. Do you see that same trend for Kroger in that space? Because those Target and Walmart knocked it out of the park on that pickup at the store.
Yeah, they did. I think that's doing really well for them. I think Kroger's revamp of their stores has done really well for them as well. So they're getting people to order online and then come into the store and sometimes spend more money, which is always a good thing. I thought it was really interesting in the Target announcement. The CEO in an interview afterwards said, that Amazon and Whole Foods is about one of the last things that he thinks about when he thinks about threats to his grocery business. And so I think, I think Kroger's pretty much through the woods there. They're ahead of the curve. I like their business, and from a defensive perspective, they're playing very well.
Yeah, I kind of agree with that. That whole in-store pickup is blown up. But for more on social media, let's bring in TD Ameritrade Network's own Jenny Horn. Good morning, Jenny.
Good morning.
Are you ready to go Krogering?
I guess so. I don't really understand that expression.
Boy, oh boy.
I know.
You young millennials.
Well, I mean, Andy didn't know it either, which gives me some cred. But
he's at the top end of that millennial chain, too.
Whatever. You're old.
So what are you seeing on Twitter as far as Kroger goes?
So Kroger is a brand that people really respect and love, and you see that definitely reflected on social media this morning. I mean, people have really good things to say about Kroger, and it's not every day that I search a company and there's so much positive noise. So that was kind of good to see. And they also own actually Mariano's, which is in Chicago, because I don't go to Kroger because they're not here.
Right.
But Mariano's is another brand that's super well regarded.
Oh, expanding massively in Chicago.
Right. So you kind of see that really positive noise on social media this morning. But our first tweet says, Kroger, we got our range now, but has earnings March 7th. Options are pricing in that whole red range. That's a shame. Could have been a fun trade. So this person is talking about the movement going into earnings. What are you watching going into earnings pre-market tomorrow? Well,
volatility is elevated in here naturally going into earnings a little bit. The anticipated move plus or minus about $2 on a $28 stock that percentage-wise is still pretty big. But I think the key thing here is that if you're going to trade earnings or if you're going to go into this with an earnings type play, make sure that you're doing it, your downside, because there can be surprises on any report. We all know that. It can move outside that one standard deviation move. So that's what I'd be more focused on. Yeah, there's elevated volatility, but that's for a reason.
Right, and Target's numbers were pretty positive, so that's a good thing.
That's a positive. And Walmart's numbers were good. The stock just kind of fell a little bit after the report, even though it was a decent report.
Right, and we have Costco post-market tomorrow, so those numbers will also be closely correlated.
Retail week, Jenny.
Absolutely. So our next tweet is from Chad Soup, who says, the Amazon effect is overblown. Whenever companies sell off on news about Amazon, scoop them up. Kroger, Walmart won't be impacted. Amazon will have trouble penetrating new markets. So obviously there's this huge fear in the grocers right now with Amazon claiming they're getting into this grocery space. So is this fear actually a threat? Will these grocers actually be threatened by Amazon?
Well, I think naturally they'll be threatened a little bit, but I actually almost think that it makes them get up to speed, execute a little bit better, and speed to market, and fight off those competitive issues. Andy, and you saw that with some of your data where maybe Kroger's not getting impacted by Amazon and some of these delivery businesses on the e-commerce side because they're transitioning well and they're adapting well.
Yeah, it's the beauty of capitalism. I mean, you see, Amazon come in, pose a little bit of a threat, and all of a sudden, every grocer out there is trying to provide more convenience and online ordering to its customers, and Kroger's doing a very good job of that, along with Target and Walmart. I think that what Chad's saying in here is probably pretty accurate. I think Amazon is really, really good at creating new markets and creating new opportunities and maximizing those, but yet to be seen on turning an acquisition into a major win for them. I think that's yet to be seen. So until then, let's stick with the ones that have proven themselves. That's Kroger, that's Target, and let's see how this report goes. I think a $2 implied move is kind of right there in the correct range. It's all about guidance this quarter. It seems to be for all of these companies, and I think Kroger's going to have some pretty good things to say.
Yeah, you made a good point there with the Amazon's acquisition of Whole Foods. That was a real drag on their earnings, and seemed like the only drag on theirs as they try to expand that footprint into brick and mortar stores. Where Kroger's, the footprint of Kroger is pretty massive. I think they've got over 2,500 stores or something like that. So
yeah, and grocery is just a really tough business. It's a really tough business, and if you don't have that in your kind of corporate blood, it's a tough acquisition to lever.